Ripple is not trying to integrate with banks. And if that sounds insane, buckle up, because the truth is even bigger than the narrative you've been told for years. For the longest time, everyone in crypto thought Ripple was the one knocking on doors trying to get into the club of global banks. But there's a brand new thesis emerging, and it flips that idea upside down. In this video, I'm going to break down exactly what that means, why it changes the entire game for XRP, and how this shift connects directly into the mind-blowing numbers pouring into the XRP TFS right now. Before we go any further, if you enjoy deep dive XRP content that cuts through the noise, make sure to hit that like button and subscribe. Seriously, it helps more than you know and keeps videos like this coming. Now, let's get into why today's data is shocking, even the people who have been bullish on XRP for a decade. Because for years, everyone assumed that when the XRP ETF finally launched, it would constantly be compared to Solana, maybe Cardano, maybe some mid-tier chain. But Bitcoin and Ethereum, those were untouchable, the kings of ETF flows. Well, as of December 2nd, which is today, the numbers tell a completely different story. XRP isn't just performing well, it's outperforming Bitcoin, Ethereum, and Solana in net inflows. Yes, you heard that right. XRP is leading the pack. Ethereum, meanwhile, isn't just underperforming, it's actively bleeding capital with net outflows. And this lines up perfectly with something I've been warning about for months. There is a massive institutional shift happening quietly behind the scenes. And it isn't hype-driven, it's thesis-driven. Institutions no longer care about glossy narratives or vaporware promises. They care about something very simple, real, defensible, proven use cases. And the Ethereum thesis, which relied on the idea that everything would be built on Ethereum forever, that its ecosystem would become the universal app store for every financial product on Earth, is falling apart. Ethereum is a great sandbox. It's a fantastic test environment. But once a project gets big, once it needs scale, once it needs custom rules, custom throughput, custom compliance, they leave. They build their own chain, they move away, and institutions are noticing. They don't want to put massive money into an ecosystem where major players graduate away from the base layer the moment they succeed. It's the equivalent of building your skyscraper on someone else's land with someone else's building codes permanently locked in. It makes no sense long-term. And right here, this is where XRP's design philosophy shines, because the XRP ledger was never built under the illusion that everything needed to exist on the ledger itself. Its brilliance is in interoperability. XRP doesn't need to host the apps. It doesn't need every smart contract, every protocol. It just needs to be the frictionless settlement asset that can move and finalize value across any network without getting in the way. That design choice made over a decade ago is now paying off in real time as institutional investors look for assets with real-world use cases and real-world settlement utility. Now let's get back into the ETF inflow story, because the implications here are huge. The reason XRP is attracting institutional money isn't simply because it has hype or a community. It's because these investors are coming into the crypto market today, not in 2017 or 2021, and they aren't impressed by meme coins, punzomics, or speculation disguised as utility. They come from the world of AI funding, tech infrastructure investments, supply chain innovation, robotics, cybersecurity. And in those industries, you don't invest because a community is loud. You invest because the tech solves a real problem in a big market. XRP fits that framework perfectly. And this is why XRP's use cases, cross-border payments, and settlement are so compelling for institutions. They're clear, they're proven, they're measurable, they're already deployed. They're not promises, they're products. Compare that to the broader crypto market where most utility coins are built on hopes, dreams, and roadmaps, not actual usage. But utility alone isn't the story, because what's happening right now with the XRP chart is also giving us one of the cleanest signals we've had in months. If you zoom out just a bit, XRP spent months grinding downward in a controlled, steady downtrend. The entire market was weak, nothing alarming. But now XRP is attempting its first full trend reversal in quite a while. It bounced sharply off its local bottom and is climbing directly into the reversal zone. And here's the important part. If XRP can punch up into the 2.30 level and hold it, that officially breaks the downtrend and flips the structure into an uptrend. That is the moment where momentum flips from neutral to bullish, and XRP begins targeting higher support regions again, especially around the $2 zone and above. And with ETF inflows accelerating, trend reversals happening at the exact same time becomes extremely interesting. This new thesis completely reframes Ripple's strategy. The entire crypto space spent a decade believing Ripple was fighting to get banks to adopt its technology, to integrate Ripplet into legacy systems, to convince slow-moving institutions to modernize their payment rails. But according to this new perspective, Ripple is doing something much more ambitious. It's quietly turning banks into Ripple nodes without them even realizing it. This idea was laid out in a write-up by Stern. His point is simple. Ripple is not trying to integrate with the banking system. It is re-architecting the banking system around Ripple's rails. Instead of Ripple plugging into the banks are plugging into Ripple. And this flip in perspective is critical because it matches what we've already seen in the real world. Institutions, governments, and financial authorities shifting from seeing Ripple as a fintech vendor to viewing it as infrastructure. Think about the difference there. A vendor provides a product. Infrastructure provides the foundation upon which everything else must run. Banks have always had one enormous advantage, the ability to control fiat because they manage deposits, custody, settlement, and compliance. They were always able to restrict the lanes that crypto could travel on, but stablecoins broke that monopoly. And yet, stablecoins have an issue of their own, regulatory complexity, especially when a stablecoin represents a giant pool of assets sitting under a single balance sheet that creates systemic risk, audit problems, and compliance nightmares. What Ripple built solves this bottleneck in a way that most people in crypto never appreciated. Ripple's architecture uses what Stern calls a dual-rail settlement structure. On one rail, fiat stays exactly where regulators want it, on the bank's balance sheet. On the other rail, stablecoins, tokenized fiat, RLUSD, or whatever denomination you're moving, travels on Ripple's settlement layer. These two rails run separately, but settle as one. That's genius. It means banks don't have to integrate crypto in the way regulators fear. They never have to directly handle the tokenized value. They never have to take custody of the stablecoins. They simply use Ripple's rails as the settlement infrastructure, while their fiat ledgers remain untouched. Compliance stays pristine. Risk stays contained. And yet the payment system becomes faster, cheaper, smarter, and infinitely more flexible. This flips everything because suddenly banks aren't integrating Ripple as a crypto solution. They are leveraging Ripple as the settlement backbone that upgrades their entire operating model. And here's where things get even more interesting. If Ripple secures a banking license, which is where a lot of current speculation points, it becomes the first institution capable of internalizing fiat to stablecoin to tokenized asset conversions without the bank ever touching the crypto side of the transaction. That slashes 95% of regulatory friction instantly. It unlocks a completely new way for banks to operate in a digital world without having to dismantle their legacy systems. Now add in everything Ripple has been doing over the past year. RLUSD is being positioned as a bank-grade stablecoin. ODL corridors are reopening worldwide. Ripple Prime targets institutional-grade services. Custody acquisitions like Medico, G-Treasury, and Fortis bring enterprise-level asset management. Singapore's MS expands Ripple's licensing framework. Amina Bank runs tests with Ripple partners. Google Cloud pipelines are being tested for Ripple-integrated institutional ledgers. When you put these pieces together, it doesn't look like a company trying to sell one-off products to banks. It looks like a company quietly consolidating the entire digital settlement ecosystem under a single unified infrastructure layer. This isn't product expansion, it's structural takeover. Ripple is building settlement plumbing that banks cannot replicate. They lack the engineering. They lack the global infrastructure. They lack the blockchain native talent. And they lack the ability to move as quickly as Ripple already has. So the question changes from will banks adopt Ripple to will banks have any choice but to adopt Ripple? Because in the emerging world of tokenized value, where everything from currencies to bonds to carbon credits to real estate needs instant settlement, the institution that provides the settlement layer becomes the foundation of everything. And the truth is, banks don't have that foundation built. Ripple does. Once banks start relying on Ripple-certified interfaces that allow them to settle fiat stable coins and tokenized assets through one unified layer, XRP becomes a systemic part of the entire machine. Not flashy, not front-facing, not hyped, but quietly essential. The same way TCP/IP is essential to the internet. Nobody thinks about TCP/IP. Nobody needs to understand how packets route between servers globally, but without it, the entire system collapses. That's the role XRP is positioned to play, the hidden layer that moves value across everything else. Not the speculation layer, not the meme layer, the plumbing. And this thesis also explains why Ripple is focusing less on partnership announcements and more on deep foundational moves. Licensing, custody, treasury management, compliance architecture, institutional, grade tooling, bank-ready settlement systems. These are not hype-driven moves. These are nation-scale infrastructure pieces. But what makes this shift so powerful is that it wasn't obvious for years. Everyone thought Ripple was fighting an uphill battle trying to convince banks to modernize. But in reality, Ripple wasn't trying to get banks to adopt their software. They were building a system banks would be forced to adopt because it solves problems no other system can. And this is also why the Ripple versus banks narrative was always wrong. Ripple was never competing with banks. Ripple was competing with the outdated rails banks were forced to use. Swift isn't a bank. It's a messaging system glued to 1970s architecture. Ripple doesn't compete with banks. It gives them the ability to finally move beyond those outdated constraints. And that's what scares people who understand what's really happening. Because once tokenization becomes standard, and it will, the settlement layer becomes the most valuable infrastructure in global finance. Whoever controls that layer doesn't compete with banks. They power them. And this is why the thesis says Ripple isn't trying to integrate with banks. Banks are integrating into Ripple. This is not financial advice. When this system goes live, it won't look dramatic. There won't be fireworks. There won't be a giant Ripple replaces Swift headline. It'll happen the same way every major financial transition has happened throughout history. Quietly, then suddenly, the public never sees the infrastructure shift. They only feel the effects long after it's already become the new standard. And that's exactly how Ripple has engineered this entire rollout. The future financial system won't be announced. It will be deployed. You'll wake up one day and banks will simply settle faster. Cross-border transfers will clear instantly. Stable coins will move across borders like emails. Tokenized assets will trade with the convenience of clicking a button. And nobody will frame it as Ripple's technology. It will just be the new normal, the invisible layer powering everything beneath the surface. By the time the average investor realizes what happened, the architecture will already be locked in place, and XRP will already be embedded into the deepest levels of global settlement. This is why institutional behavior suddenly makes sense. For years, big money hesitated because crypto felt chaotic, unstructured, and disconnected from real-world demands. But now institutions aren't looking for narratives. They're looking for rails. They want infrastructure. They want a system that makes sense within the compliance frameworks they already live in. And Ripple is the only company in the blockchain space that built that system specifically for them. Not for retail speculation, not for hype, but for operational stability. You can see this in every data point that's been emerging over the past several months. ETF inflows shifting toward XRP are not random. They are not flukes. They are smart money reallocating from speculative tech to functional tech. Look at Ethereum. Massive outflows and shrinking institutional confidence. That doesn't happen for no reason. Institutions are realizing Ethereum's everything runs on ETH forever. Narrative doesn't hold up under real-world scaling, regulatory tension, and cost structures. They've realized that enterprise platforms eventually build their own chains, not rely on a public execution layer they can't control. Meanwhile, XRP thrives precisely because it was never designed to be the app store for crypto. It was designed to be the interoperability fabric, the settlement conductor that moves value between chains, banks, networks, and tokenized assets without friction. Institutions finally see that. They see a ledger built for efficiency rather than speculation. They see a token with a defined economic role rather than a vague narrative. And they see an architecture that can sustain trillions in throughput without collapsing under congestion. Now combine that reality with a macro environment that is rapidly becoming more hostile to outdated financial plumbing. Banks are under pressure to modernize. Central banks are pushing tokenization. Governments are pushing for real-time payments. Corporations are preparing to tokenize entire portions of their balance sheets. This is a perfect storm, and Ripple positioned itself exactly where all these forces converge. This is also why Ripple is making moves that seem boring on the surface, but are actually seismic under the hood. Licenses in Singapore, Dubai, Ireland, and the US aren't flashy announcements. They're prerequisites for running settlement rails at scale. Custody acquisitions aren't hype plays. They are mandatory infrastructure for tokenized value. Treasury management tools aren't marketing fluff. They are the backbone of corporate settlement systems. All of this paints one picture. Ripple isn't chasing publicity. It's building the digital backbone for the next century of finance. And when you view everything through that lens, the Ripple isn't integrating with banks. Thesis becomes obvious. The banks are integrating into Ripple. They are being funneled step by step into an architecture that solves their biggest structural, regulatory, and technological problems. And once this funnel closes, it becomes irreversible. Nobody goes back to slower, more expensive, less compliant systems once a faster, cheaper, and cleaner option exists. This is exactly what happened with the internet. Early adopters jumped in because they saw the opportunity. Late adopters jumped in because they had no choice. And once the new rails were in place, the old world dissolved without anyone even noticing. That's what's happening right now in finance. And XRP is the settlement layer sitting right at the heart of it. The irony is that most people still think this is about partnerships or press releases or whether one bank publicly announces they're using Ripple. They haven't realized that the narrative has moved far beyond that. This is about system-level architecture. This is about rails that are being standardized underneath the surface, while the public focuses on price charts and memes. The people who understand this early, the people who understand what settlement infrastructure actually means, are the ones positioning themselves before the shift becomes obvious. This is why I've been hammering on one theme over and over. Institutions don't care about narratives, they care about systems. They invest in functionality, not hopes. They allocate based on utility, not hype. And XRP is now the only major asset with a clear, proven, scalable use case that aligns directly with the next generation of financial infrastructure. But here's the part almost nobody talks about. When a system becomes plumbing, its value doesn't come from speculation. It comes from inevitability. Plumbing doesn't need hype. It doesn't need marketing. It becomes valuable because every other system depends on it. That's the trajectory XRP is on. It won't feel like a moonshot. It will feel like a slow, relentless, unstoppable absorption into the global settlement layer. By the time the world realizes it, XRP won't be framed as a cryptocurrency anymore. It will be seen as a critical systemic component of the international value grid, a bridge asset for tokenized economies, a settlement facilitator for banks, an interoperability layer for global liquidity. That's not a narrative. That's an economic function. And economic functions don't disappear, they compound. And if all of that is true, if Ripple is restructuring the financial system from the inside out, then what we're watching right now isn't the beginning of a trend. It's the opening act of a transformation that will look obvious in hindsight, but invisible to almost everyone while it's happening. And if you want to be on the right side of that shift, understanding this isn't optional, it's essential. Which is exactly why, if you truly want to position yourself ahead of the next decade of XRP-driven infrastructure change, you need access to deeper research, private insights, and the advanced strategies that retail investors never see.